Hey, I wasn't gonna be making a video since I was gonna be gone for a while, like I said in my last video, but so many things are happening right now that I'm just gonna make a update real quick. This is Japan's stock market, and it just had its worst crash since Black Monday 1987. Now in a multi-day drop, and the severity and how vicious this move down has been. This is more aggressive than anything we saw in 2020 and 2008. And this is coming after Warren Buffett just sold half his Apple stake. It's causing panic all around the world. The VIX yesterday just spiked. By the way, before I get into that, the Japan stock market is down 29% in a month now, and I don't think this is over. I think it's only the beginning. Now it could bounce here, like we're seeing, right? This is gonna be the case during a volatile move, right? The VIX, the volatility index, is now back to two levels only seen in March of 2020 and September, October of 2008. Now you might say, oh, well, that means the bottom is in because it's spiked up. Okay, let me show you. In March of 2020, when the VIX took its first move up here, up to around 50, it pulled back to 25, and then it went up to 86, and it stayed there. BTC bottomed right there on March 13th, and the stock market bottomed on March 23rd. Okay. In 2008, if we go back and look what happened to the VIX there, it shot up to 50 and then it pulled back to 40 and then it went for a move up to 76. I don't know if that's a real wick down there to 29. Maybe it is. But let's say 47, and then it moved up to 96. Now the VIX is implied volatility for S&P 500. You take this number divided by 10, and that's the implied volatility move in a day. Okay. Uh, so for the people who are still in denial about the recession, well, now we also see the VIX spiking up to levels only seen during very bad times. If I open the unemployment rate, you can see it here, how bad this actually is, and how, like what we've been talking about for months now, this is not going to stop here. I've been talking about the unemployment rate. I made multiple videos. I mean, if you go back and look at my channel, right, this is now from 3.4 up to 4.3. They kept telling me it was not going to continue rising. If we do this and we go to, where is it? Lags in the money supply tell us this deflation is coming Q3, Q4 of 2024. Depressionary economics, deflation is coming, soft landings are fantasy, people keep losing their jobs, banks are insolvent, and everyone thinks it's going to be soft landing. The unemployment rate is about to go up in a vertical line in 2024, people are losing their jobs, the Great Depression has begun, the Great Depression is coming, nobody gets it, right? And like we've been talking about in regards to the quantitative theory of money, it's like uh, Steve Hanke, the professor at Johns Hopkins University that I have been listening to for learning about the quantitative theory of money. Here's this tweet that I was citing. Markets across the globe are crashing. Long ago, using the quantitative theory of money, Greenwood and I predicted a 2024 year's recession. The US M2 money supply has contracted since July 2022. All historical contraction, the US M2 has resulted in recessions. Now, I'm going to bring up a video right here from uh, Steve Hanke during an interview where he said this.
And
So again, if I open M2 money supply before we go into this video, M2 money supply. So what he says here is that changes in the money supply will be felt 20 months after the changes. So that would be percent change from a year ago. Let me change this to a area, color, make it red. All right. 20 months ago would be December of 2022, which means we're going to see deflation, which is what we're seeing right now. We're seeing a rise in unemployment rate. We see deflation for the first time since the pandemic. We're seeing a big spike for the first time since the pandemic. We're seeing the unemployment rate rise for the first time since the pandemic. So again, he says, listen to what he says in this video. So December of 2022 will be 20 months ago. Listen to this.
the why is this so important? This is where people get messed up because they forget what's happening today is the result of something that happened to the money supply 20 months ago. So no one remembered. Number one, most people aren't at the Fed. They're not even looking at the money supply. But if you are looking at the money supply and think it's important, most people forget what was happening 20 months ago. So they're all confused. They look at daily data that are coming out. They're what's called data dependent. The Fed is data dependent. They look at the data coming out on interest rates, the stock market, all interest rate spreads, and all these other data sensitive things that are the result of changes that happened in the money supply a long time ago. So they're looking at the symptoms, not the cause. The cause is always the money supply.
For the
So the reason why I'm bringing this up is because the this crash is more severe now in regards to the speed and the aggressiveness than March of 2020 and 2008. It's the same as 1987 and 1929. Now, this is again in the making of competing, potentially rivaling the 1929 Great Depression crash. Okay. Now, yesterday the NQ was down bad. Ever since the jobs report, the stock market has not liked the reaction because, again, bad news is not bad news. The yield curve, like we've been talking about, was very close to coming out of inversion. Actually, it even briefly came out of inversion here for the first time since July of 2022. So who would have guessed that, like we've been talking about the whole time, it's gonna continue playing out. Every single time the yield curve re-steepens, you get a spike in unemployment rate. There it re-steepens, there it re-steepens, there it re-steepens, and now it's re-steepening. Well, what's happening to the unemployment rate? Up with the yield curve up. Up with the yield curve up. Right? And the regular candle is the yield curve. And like again, it will go really far, I think, this time. The unemployment rate. I don't think this is gonna be a regular recession. I think this has a good chance of being a Great Depression. And this is what I've been saying for a long time, right? And so for the people who are in denial about it, again, let's just look how this plays out every single time. Okay. Let's overlay the Nasdaq. What happens every single time when the yield curve comes out of inversion? Yield curve comes out of inversion, the stock market crashes. Yield curve comes out of inversion, the stock market crashes. Yield curve comes out of inversion, the stock market crashes. Yield curve comes out of inversion, the stock market is crashing. Okay? Now again, crashes don't play out in a day. Crashes play out normally over the course of 1.5 to 3 years, depending on how bad it is. The dot-com bubble and the Great Depression took 2.5 years, whereas the global financial crisis took 1.5 years. Now the VIX is spiking, which means that we could have a viable bottom um, within the next couple of weeks if it continues like this. If it goes up to 100 and it stays there and it's like elevated volatility for about a month, then I gotta stick to my plan, right? And my plan was to basically buy. Again, I'm gonna open the picture here. I am bullish. I wrote this a year and a half ago. I'm bullish when the VIX goes to 50 to 90, unemployment rate moons, and the re-steepening of the yield curve. All of these things are playing out right now. But it's about elevated volatility. Okay? So yes, you're gonna see insane bounces. Yes, you're gonna see insane volatility. But I think that the long-term trajectory now is down because again, the markets are crashing because of two reasons: the yen carry trade unwinding, and number two, because bad news is bad news. We got deflation last month over month, which is the official bubble pop, and we are seeing the unemployment rate go up. Even silver went down yesterday, and this is what we've been talking about as well. Silver goes down with the stock market. Gold goes down even with the stock market when the volatility index spikes, like yesterday. Okay, when the volatility was spiking, even gold was selling off because it's doing its job. It's providing liquidity in times of emergency, right? So again, things are playing out the way they should be in a crisis like this. Ethereum down this much, 37% in a week. This is ever since Donald Trump came out right here and said, do not sell your Bitcoin, and Bitcoin is going to remain right there at the very top. I'm not joking. Right there at the very top. He said that. Okay? And I think, again, I can't prove this, but I think that because based off of what Elon Musk did in 2021, he said the same thing basically. I think these guys are getting paid a lot to say this to provide extra liquidity towards or for the people who want to get out of the market, who know what's coming, right? So yes, there's gonna be deep buying and shit right now, probably, but again, I don't think that this is gonna end up in any good way, right? In the long term. And if you don't think that's a big move on Bitcoin, Ethereum, these are massive moves, wiping out all of gains from 2024 in like a day. And if you don't think that this can go down further, this right here this is in Japan stock market, right? This is a 240-day trading range in 2023, and it wiped it out. Let's see, from this will be high, 34k down to 30k. It wiped out 240 days of trading in two separate 1 hourly candles. In 2 hours, it wiped out 240 days of trading gains. So you can say that it's over and everything, and that the worst is over. That's not what history tells us, bro. And if you're still in denial about, oh, it's a recession or potentially a depression, we're at volatility levels only seen in September, October 2008, and March of 2020. You might say, oh, those were bottoms. Right, but not in the beginning of the VIX spikes. The beginning of the VIX spikes, you can see if I overlay the S&P 500. Yes, it's bad when the volatility spikes and it is near a bottom in regards to like a time frame, right? But in regards to like price, no. This was the beginning of the collapse, okay? When the VIX had its first move up, and then it takes a breather and then it goes for the aggressive move up. Same thing in September, October 2008, right? You could have bought right here, but you would have had to suffer through about a 50% further decline, right? So yes, when the VIX spikes up here to about 60, like right here, exactly what I just did in October 2008, 6th of October. Let's see what the S&P 500 did from September 6th, 2008. And let's see if that was the bottom or if it went down a lot more from that point, from October 6th, 2008. Okay, from here, this is October 6th, 2008, right here, yeah? And then it bounced back up, and then it went down another 40%. So no, I don't think this is over. When the VIX spikes, it means it's just the beginning of a crash. Now, this is confusing me too because normally VIX spikes don't happen in the beginning of a bear market. They happen towards the end of a bear market, with the exception of this. But this was an artificial shutdown. So the fact that VIX is spiking right now, and again, the the aggressiveness of this move is pretty insane. Uh, you had Nvidia down like 13% in pre-market yesterday, 14, 15%. Apple was down like 10% in pre-market and then recovered, going back into the end of the day. But again, we have like technical support. These previous highs are turning into support right now and so on. So I think once you break those levels, it's gonna start to get very violent. And again, this is as interest rate cuts are happening in the bond market, right? And this is what the Fed follows. They follow the 2-year yield. And they were telling me for 2 years that, oh, there will not be a VIX spike. Oh, the unemployment rate won't go up. Oh, there won't be deflation. Oh, interest rate cuts are bullish. All of those things are being disproven right now. So if you think everything is fine, that's perfectly fine with me. It doesn't really bother me. But everything that we've been talking about has been playing out now. Now, one thing I will admit is that I got the timing wrong last year. I thought the crash was going to come earlier. Is this the crash that begins the bear market? I think it is. But does it mean that everything has to crash and crumble within the next week? No. Does it mean that it has to happen within the next month? It could, because the VIX is spiking. And normally when the VIX spikes like this, bear markets conclude a month from that point. Right? September, October 2008, it was done a month after that. March of 2020, it was done in a month. So again, the VIX spiked, and yesterday it was up from the low here. The VIX was up 200%, and the yield curve re-steepened really hard. Okay, it went from a minus 0.241 delta to minus 0 or plus 0.11 delta, right? So it actually went above the green horizontal line, which is a re-steepening of the yield curve due to a bull steepener. And a bull steepener is called that because it's bullish for bond prices, it's bearish for stock market and the economy, which we have been seeing, right? So yeah, you're gonna see some green in the market, and you're gonna see more selling, right? But in the end of the day, there are so many signs right now. Nvidia CEO has been selling. Amazon CEO Jeff Bezos has been selling. What's Nvidia CEO called? Jensen Huang, right? Warren Buffett sold half his Apple stake for 85 billion. He now has $250 billion in cash. We're seeing the worst stock market crash since Black Monday 1987, rivaling the Great Depression 1929 crash even. People will say, no, it's not as bad as the Great Depression. It went down 50%. Right, it went down 50% in 2 months. We're down 30% in 22 days in Japan. So yeah, this is on par with the Great Depression. And you might say, no, because the Great Depression had 12% daily declines. Yeah, we just had a 12% daily decline here. What was it, Black Thursday? October 24th, 1929, minus 11%, and then Black Tuesday the following week, October 19th, 29, October 29th, 1929 was minus 12%. So yeah, we are seeing Great Depression style crashes here. Black Monday was just worse in regards to 1 day decline. But yeah, this is as bad as the Great Depression. So if you think it's all over and that this is not coming to the US stock market, again, 3 days of selling erased, let's see, 3 days of selling erased 440 days of stock market gains. 3 days. So I don't think this is over. Normally you need a VIX spike up to 100, it needs to stay up very high, or not necessarily 100, like I wrote in this, 50 to 90. So I think this is only the beginning of something very bad. But it could recover here for a few days. Like we saw during COVID when the VIX spiked. Again, this is the initial move up. When the initial move up came here on the 28th of February, let's look what the S&P 500 did at that point. 28th of February. So you had this initial move down, about 16%, and then you recovered about 10%, and then you began the decline after that in the next 3 weeks. So maybe we hang around there for about a week or so, right? It's possible, and then we go down based on what the VIX is telling us. But maybe this is just a, individual VIX spike, right? If it looks like COVID, this is what it would look like. Okay, that's what COVID would look like. Now, am I saying that's gonna happen? I don't know, but I'm saying the VIX spiked like this last time, and we got to move down like that. So you'd be erasing all the gains from the 2022 lows in a month from now, if the VIX keeps playing out the way it did in March of 2020. And so you can sit here and say, oh, the unemployment rate is not rising. It's not so bad. Yes, it's bad. There's 12 recessions on the chart going back to 1948. Shaded areas indicate US recessions. Every single time it rises more than 0.5%, you get a gray bar. But they're not going to announce it until 12 months later. They announced in December 2008 when unemployment rate was here and the stock market was down 50%. This is not good. This is what the market partially reacted to as well. I think it's three things. It's the bad unemployment rate report, the deflation reading, which is the bubble popping, and then the yen carry trade unwinding. What does that mean? Well, people were borrowing yen at negative interest rates and they were going and speculating in risk assets. Okay, so now that's deleveraging. And before you say, oh, this cannot happen in the stock market where it can go down like Japan in the US stock market, yes, it can. There's 1.5 quadrillion dollars of derivatives, not just in the stock market, but across all markets and shit. Yeah, that could be the catalyst for this move down, which would be a deleveraging event. So you can say it's not bad, but we are seeing a crash like we haven't seen since Black Monday 1987 or the Great Depression. It's more violent than um, the COVID crash, and it's more violent than the 2008 crash. This VIX spike individual on one day, I think, is the biggest one-day VIX spike in history. So it's basically, why is this happening? Well, because everyone is sitting in the boat. Everyone thinks everything is fine, right? And like I know that the boat is sinking. Right? And let's do a horizontal line here, okay? And let's see, the last time we saw the VIX spiking up like this was in March of 2020. March of 2020. And the time before that? September, October, November, December of 2008. You still think we're not in a recession? I mean, I don't know what to tell you, man. Anyways, that's all for today. Peace.